Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April 8th, Monday, starting the week real fresh. Today, we didn't have news on the economic data side, but we got one reading. Consumer inflation expectations for March are equal at 3%. But let me just see how the trend was going. The trend is stacked at 3%. 3%, 3%, 3% since December 2023. So not only the general inflation on the CPI this Wednesday is expected to drop a little bit, but still the inflation year over year is above 3%. Also, the sentiment, the consumer inflation expectations are still stacked at 3%. So we are not progressing to the downside as the Fed was really waiting for. And I think markets are really struggling to justify this overvalue and overprice of some stocks, even though we are starting earnings season next week. This week, this Friday, Thursday and Friday are starting on the banks, next week on the stocks, and so on. But the price action today, it's really frustrating. Remember on the weekly recap on Saturday, I told you that I was watching both 15-minute, the bullish fair value gap, and also the 15-minute on the inverse. And basically today we got a little bit of action intraday, but look at this chop. So we are not moving. We are not moving out of this range. If we check the daily, we can see on the daily chart that we are basically in a narrow range, but these candles are quite scary. And also the fact that we have this fair value gap that it's still holding, but more and more we are seeing this kind of price action to the downside, coupled with the fact that other markets that we are going to review are also diverging from the Nasdaq. I mean, it's just chop and more chop. I think until Wednesday, sorry, the CPI reading is going to be incredibly volatile and incredibly hype for that. So one last thing I would like to mention before moving on the other markets, my trade was just scalped for 27 points on this liquidity during the overnight. We were just dropping and slowly building higher. And when I saw this spike, I always watch pullbacks for good entries. And as you can see, I have this mark, the golden pocket from high to bottom, pullback, and then buying opportunity here with the stop right below the bullish fair value gap with a tight stop of 11 points, risk reward ratio of 2.44, 27. So basically a little bit more than 500. And the target, this liquidity. I didn't want more. If you are greedy in this market, and now that we are seeing lower highs every single time, when you have this kind of move, when you try to break higher on liquidity and you get back into range and respect an inverse fair value gap, this is what happens. We rotated from liquidity on the buy side to liquidity on the sell side. Really unbelievable move. And then into the open, also the same. I think a lot of people were watching the pre-market high liquidity here. We dumped and we started building some higher manipulation. And then the big dump, look at this. This is the first manipulation, second inducement, and there's this fair value gap open, one opportunity, second opportunity into a really push lower. So the Nasdaq is not being able right now, is in the red. And I think Nvidia and Meta are dragging the market down. The only thing that is letting the Nasdaq at least survive a little bit is Tesla, up 5.27% on news that he's revealing the robotaxi. So let's see what happens with the robotaxi in summer. But for now, on the rest, Apple is in the negative, Microsoft in the negative, Amazon in the negative, Nvidia, Meta. So the entire Nasdaq is feeling the pain of what? Of a strong dollar, not today, but on the overall daily chart, we are building higher lows constantly. And look at the yields. Yields are pushing still 4.72, 78 on the 2-year yield, and the 10-year yield continue to spiking. Look at Friday's candle, up 3%, 2% on Friday, and today 4.4, basically hovering below this pivot at 4.5. This is really, really bad. What else is really bad? Well, I think high yield corporate bonds are still in this range, which we are not able to go. So bonds market are still holding their breath to see if higher for longer really materialize. And treasuries are basically in a clear downtrend. So this, coupled with the fact that we are seeing higher yields, makes me really, really nervous on the equities and the stock side of the market. That's why we are seeing this weakness, this rejection, this volatility. By the way, VIX is it spiked on Friday, and right now it's hovering between 1585 and 16. Remember that if we hold and we continue higher, this zone between 16 and 18, it's quite bad for the markets. This kind of increasing volatility, I think, is the expectations of the market with higher for longer, that more and more I'm seeing more clearly. I mean, Nasdaq technology, small caps is today holding a little bit, but still pretty in the middle of the range. We are just in the middle of the range. So everyone and every single market is holding for the higher for longer, but yields are pushing higher. Be careful with that. Gold is still pushing. Copper is unbelievably bullish. Silver, all commodities are increasing their prices, and this is going to affect inflation in the midterm. You have to think about that. Don't miss that. Don't forget about that. And finally, I would like to show you, this is June interest rates futures at 5.3, so no interest rate cuts, but look at this interesting move, 5.25 on the July 1. So today we are seeing an increase on the July 1, and also the first cut is going to be at September. So bonds market and interest rate futures markets are pricing in not a rate cut in May, not a rate cut in June, and maybe a rate cut in July. And for sure, I think September is going to be key. So this is the current situation with this kind of interest rate futures. So yields are pushing the narrative of higher for longer even higher. So the fear is spreading. I think Nasdaq is really suffering right now. And the only sector that is worth mentioning is consumer discretionary due to Tesla, and also financials. Remember that financials are starting their earnings season this Thursday, this week apparently. And JP Morgan, Bank of America, Wells Fargo, look at these numbers. Bank of America is 1.24% today. Quite brutal. So I think higher for longer mean high interest rates for banks, more revenue, more income, and I think that's what we are seeing. So the forecast, I'm still watching the same. Remember that Wednesday is the key day. Tomorrow we don't have either economic data, and I'm watching the same liquidity. So let's remove this intraday activity. So we took that, and we took that. And basically, as long as we hold the 15-minute, I'm still looking for longs perhaps for tomorrow. If we break this and then reject, I will be super cautious. And this 15-minute is also correlated and also in dangers of this 18,500 inverse fair value gap. So let's see what happens. We have to be very, very cautious, to have a lot of patience, because today is just the same kind of range. A lot of volatility, a lot of moves either side, and we are not picking a direction yet. So we have to exercise discipline, to exercise patience, and let's see what happens for Wednesday. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over. I think today is just a sideways day. It is not worth trading, and better opportunities will come for sure Wednesday and onwards. So be patient, be disciplined. Remember that risk management is key in these circumstances. Stay safe, everyone, and see you tomorrow.